This data on residential rents was published today by SQM Research, and it provides further evidence that markets are stronger in the smaller capital cities and in regional Australia than they are in the big cities. This isn't surprising because vacancy rates are quite high in Sydney and Melbourne, but they're very low in the other capital cities and in particular in many parts of regional Australia. And all of that is reflected in the data on rents from SQM Research published today. In annual terms, the national average situation is a 4.3% rise in house rents and a 2.5% rise in apartment rents. But for the capital cities, the average situation is 2.4% annual fall for houses, 5.2% fall for apartments. And in the past month, nationally, there's been a 1.5% rise for houses and a 2.2% rise for apartments. But for the capital cities, rents have fallen in the past month, both for houses and apartments, by about 1%. So why is that? It's because rents overall are down in Sydney and Melbourne, especially Sydney, which has by far the highest vacancy rates in capital city Australia. Sydney rents are down 7% in annual terms, according to the SQM Research figures. If you remove those two biggest cities from the equation, the overall situation for the 6 other capital cities would be rising rentals. In annual terms, Perth, for example, rents for houses have risen 7.5%, while apartments are up 5.5%. And there have been significant rises in the past month as well, which provides further evidence that the Perth market is on the rise. In Canberra, house rents have increased 6.5% in the past year, while apartments are up 3% with their rentals. The SQM figures also show rising rents in Adelaide. And what do Perth, Adelaide and Canberra have in common? Well, they're all places where the COVID-19 pandemic is under control, generally speaking, and it's business as usual, except for the border closures. They're all places with very low vacancy rates. And we know from other research that there are dozens of markets throughout regional Australia which have very low vacancies and rising rentals. Some markets in regional Queensland have the lowest vacancies on record, and there is upward pressure on rents in places like the Sunshine Coast, Mackay and Townsville. The problem for consumers interested in real estate is that our major media mostly comes out of Sydney and Melbourne, and journalists are focused primarily on those two big cities where there are plenty of negatives to write about. So we're not hearing much about the state of play in the rest of Australia, which means 2/3 of Australians are not getting much in the way of news about their home patch. Markets are solid to strong across the nation, but we're just not hearing about it in mainstream media at the moment. Now, CoreLogic's quarterly property update provides further evidence that Australia overall is holding up extremely well in the face of the pandemic. Dwelling prices, and that's referring to the national average, fell by just 0.8% over the June quarter, despite some economists saying that the market could fall by as much as 20 or 30%. The capital cities saw a 1.1% reduction in house prices in the quarter, overall as a generalisation, but in the regions, properties grew by 0.3% during the June quarter. And that provides further evidence for one of my core messages, which is that regional Australia is, generally speaking, much stronger than the capital cities overall. CoreLogic says in its report, housing market value declines were relatively mild in the June quarter. This is thought to be a function of record low interest rates, home loan repayment deferrals, and various demand-side government stimulus for owner-occupied purchases. Actually, I think they're wrong in their assessment of the reasons why prices are generally holding up so well. I think it's got nothing to do with low interest rates. We've had record low rates for years, and it's certainly not about home loan deferrals. The reality is that much of Australia, particularly Australia outside of Sydney and Melbourne, is pumping quite strongly at the moment. There are a few virus problems. It's business as usual, almost. First home buyers are very active, helped by government assistance. Vacancies are very low and rents are rising. And there's a good balance between supply and demand in terms of properties listed for sale. There's still good demand for real estate overall, but many vendors are staying out of the market, so the active buyers in the market are competing for a relatively small supply of listings. And that is keeping property values solid in most parts of Australia. CoreLogic notes that not all capital cities are behaving in the same way, as the health crisis impacts each city differently, and I agree, because it's always the case. There are always differences from one city to the next. CoreLogic says Melbourne saw the sharpest decline in values of the capital city markets, led by decreases in the inner east and the inner city regions. It says that some smaller capital cities continue to experience an increase in dwelling market values over the June quarter. For example, Adelaide, which has historically shown very little volatility in its market, saw a 0.7% increase during the quarter. And Canberra has continued to deliver price growth right throughout this pandemic period. Now, while the pandemic has impacted markets in the biggest capital cities, many parts of regional Australia are recording solid to strong price growth, including, according to recent figures, the Central West region of New South Wales. The Domain House Price Report for the June quarter suggests that Parkes, which is a location I've included in several of my hotspots reports over the past 2 years, has recorded the biggest increase in the Central West region. Parkes prices have grown 18% in the past 12 months. Now, also doing well in the Central West region of New South Wales is Orange, which is another location I've highlighted in our hotspots reports recently. Orange prices have risen 8% in the past 12 months, with the median price for a house now almost $450,000. And other towns doing well in this region include Cowra, which is up 6%, Bathurst 5%, Forbes 4%, and Dubbo, which is up 2%. Now, this pattern of regional cities and towns recording moderate to strong price growth at the moment is common across regional Australia. You'll find similar stories in regional Victoria, in Queensland, in South Australia, and in Tasmania. It's been happening consistently for the past couple of years, and it's still happening. In some cases, prices are rising despite the pandemic, but in many locations it's happening because of the pandemic. Arguably, the strongest trend in real estate across the nation right now is what I call the exodus to affordable lifestyle. This trend was underway before the pandemic started, and it's been exacerbated and enhanced by the pandemic lockdown periods. New figures from CoreLogic show that 3/4 of Australia's major regional housing markets have risen in value in the past year. CoreLogic research found that of the 50 house and unit markets in 25 of the country's biggest non-capital city regions, values increased in 37 of the 50 markets in the 12 months to July. House prices went up in 20 regional areas and dropped in only 5 of those regional areas. Locations that stood out for strong price growth in this report included Launceston in Tasmania, the Eliwalla region of New South Wales, and Ballarat in Victoria. Now, further evidence of solidity in real estate markets has come from monthly data presented by the Commonwealth Bank. This indicates that spending intentions around buying a home increased again in July. CBA Chief Economist Stephen Halmarick also suggested that there were improvements in spending intentions around retail, travel, and education. But the Home Buying Intentions Index continued to bounce back from the pandemic shock earlier. Sentiment around buying a new home has now climbed back to the same level it was in July last year, which was just after the Reserve Bank announced the first of its 3-round rate cutting cycle, which saw the official cash rate reduced from 1.5% to 0.75%. Halmarick says gains in the index have been driven largely by 2 key inputs: an increase in the number of home loan applications received by the Commonwealth Bank and a corresponding increase in the number of Google searches about buying a house. And he says CBA data shows a rise in new mortgage applications taking advantage of low fixed interest rates, and this should help provide support to home buying in the future. Now, the Perth property market, which doesn't get talked about much in mainstream media, is set to be in high demand well into 2021 and potentially longer, with the state's response to COVID-19 prompting expats and interstate fly and fly out workers to call WA home permanently. Leading demographer Bernard Saltz says Perth is the right place for the moment, thanks to WA's management of the pandemic and a move towards encouraging people to work from home. He says, rather than highly skilled Western Australians moving abroad or interstate to pursue careers in the bigger cities, these people can now operate remotely and in a state with no community transmission of the virus. Salt says it very much seems like Perth is the right place at the moment. If you look at the last property boom there maybe 4 or 5 years ago, this seems to be pushing in the right direction, so hopefully it's going to last maybe the first half of the 2020s. And I certainly agree that Perth is heading into a growth phase. Perth reflects many of the dominant trends that I see in Australian real estate at the moment. It has the pandemic under control, pretty much. Its economy is pumping quite strongly. It offers an affordable lifestyle, and it has low vacancies and rising rents. Other capital cities that offer similar qualities to that at the moment include Adelaide and Brisbane. And the capital city that's doing the best in terms of price growth is Canberra. Canberra has delivered growth in its house prices in each of the past 5 months. In other words, right throughout the pandemic period, Canberra prices have kept on rising month after month. So the key message from all these research-based items that I've presented today is that growth is the norm in Australian real estate at the moment, not the exception, as mainstream media is suggesting. Bye for now.